Hey everyone, it's Daniel here from Infovest. Hope you're all doing well. Let's talk about this layoffs that are happening in January. We're seeing the effects of the tightening that's been happening. We're seeing a lot of tech companies like Amazon, coming out, Microsoft coming out, Goldman Sachs as well coming out saying they're laying off workers. Now, mind you one thing, right? That interest rates, the effects of interest rates, tend to take its time, the true effects. So, with these layoffs that are happening, that basically, the layoffs that we're hearing right now and that we're seeing right now, is basically the effects of interest rates 6 months back, which takes us to around July time, where rates were around, let's say, 2%, around there. So we're seeing the effects of 2% interest rate hikes, even though we're around 4.5 around there. We're going to approach or expected to approach about 5.1%. Maybe we might go higher, maybe not. And we're already seeing the effects of 2%. So it takes about 6 months to a year for the rates to really kick into the economy and affect the markets. And we're just seeing the effects of July rate hikes, if we were to count for 6 months, right? So what does that mean? If we double the rate hikes to 4%, 4% when we hit around in the November time, right? That means by June, July of this year in 2023, we will see the effects of 4%. And then heading into August, September, October, closer to the end of the year, we will see the effects if we get to 5.25%, if we get there, right? If we get there, we will see the effects of that by the end of the year. So what does that tell you? When you're looking at the markets right now, you're seeing the economy being affected by rate hikes. You're seeing the impact of only 2%. If 2% is doing this right now, what do you think if we double it is going to do to the economy? If we double it from 2 to 4, because we already have. We're way above 4%. We're just waiting for the effects, which tends to be a little bit lagging, and you tend to see it a little bit later, 6 months to a year, approximately around there, into the economy. So we'll probably see the effects later on at the mid of this year or closer to the end of this year, which you can start speculating that, hey, 2023, if you thought 2022 was bad, 2023, in my humble opinion, I think is going to be the rude awakening, especially for the stock market, right? The stock market is bouncing up and down. There's optimism that the Fed is going to cut, it's going to pivot. But let's not forget, before they cut, they need to pause. There's no signs of pausing right now. They expect to do, rate hike that's coming up very soon, February 1st, then another rate hike, and then possibly a third rate hike. So 3 rate hikes. Right now what's penciled in is 2 rate hikes from the markets, but markets are predicting that they're not going to do the third one. But if they go ahead and they continue to hike rates, definitely there would be a rude awakening for the markets. Now, if the markets do get what they want, and let's say the Fed raises rates, in February, 25 basis points, does a second one, decides to pause, could you get a rally in the equity markets? Sure. But I would say, again, let's see if truly, if the market is right or wrong, and which side I take. But if the market is pricing in that, hey, we're going to pause and everything's going to be fine, we're going to get a soft landing, then the equity markets will rally. But why I call it the rude awakening is because if they do rally on this, and anticipating that when we head to June, July of this year, if we're already feeling pain of 2% and we head to June, July of this year to feeling the effects of 4%, and they think it's going to be fine, I argue against that. I think not so fast, equity markets. So again, I could be wrong. This is not financial advice. I'm not a financial advisor. I'm not a financial guru. None of that. I'm just taking information I'm seeing from the markets and the news and trying to put it together and explain it here. Let me know what you guys think. Leave a comment below. Hit the like button, subscribe, bell icon to be notified on the next video. Let me know if you think heading in 2023, we're going to see more pain. Do you think we're going to see a soft landing, or are we really going to see a hard landing? Let me know what you guys think. I think it's really dependent on a lot of what the Fed's going to do, and I think the damage is already done, and we are in a recession. It's just time will tell now, and 2023 could be another interesting year. All right, guys. See you guys around. Cheers. Bye.